Okay, module 2 video 8 and video 9. I decided to squeeze both videos together because it makes much more sense. So module 2 video 8 and video 9 on how to place your trades and split your positions into multiple parts, and how and where to place stop loss orders correctly. The reason we split a position into multiple parts is because we want to take incremental profits and we want to leave one position, the last position, open as long as possible after doing our top-down approach in order to maximize profits. I will show you on the chart what I mean. So let's start immediately. I use the USD yen 4-hourly chart for this example. Forget the top-down approach right now. We are just focusing on our video 8 and 9 on the positions and on the stop loss. Okay, now first of all, if you take a look at this chart, what do you see? A crossover. The 12 is crossing the 36 to the upside. Nice green candles. Then we see red candles retracing back to the 36 EMA. The candles are getting smaller. Not enough pressure. The price cannot break the support coming from that 36 EMA, and suddenly price breaks out. So what do you want to do? Here is you take your trend lines, look at the lowest point here on the chart before that crossover. Price moves up. Nice green candles. It retraces back to the 36, many touches there, and you can create a nice 2 to 3 line, 0.1, 0.2, 0.3. Now that line breaks and you have a nice 4-hourly 2 to 3 line break candle, and after the close of this candle exactly here you had an entry, right? Just by looking on the 4-hourly chart, even without the top-down approach, just ignore it for now. But if you look at this setup, easy to see a 2 to 3 line break, and this here would have been your entry. Now when we enter a trade, we want to split it into 3 parts. The reason I explained before is because after doing the top-down approach we have targets, right? And we have short-term targets and long-term targets. So if it makes sense and we have a major resistance is really far away, we would take incremental profits with the first and second lot, and we would leave the remaining lot open, trying to maximize profits, okay, to make as much as possible. That's the way to trade and to really grow an account steady and for as long as possible. Okay, so if you want to trade for the next 20 years, that's what you want to do. Focus on the last lot. Now, for now, we don't want to go into much detail with the remaining lot. Let's just focus on our positions. So you would open a trade here, and after opening a trade you would immediately put a stop at the correct place to protect your account. The most important part, after opening a position, you already know where to put your stop, so you place your stop at the correct price, and you also put in your targets. Let me demonstrate on that 4-hourly chart here. That would have been your entry, and now you have to put a stop somewhere. Where do we put our stop? Always under 0.3. That is a general rule you cannot forget, you should not forget. This is your 0.1, 0.2, and now the retracement 0.3. and ideally you want to see retracement back to the 36 EMA if you want to trade conservatively. As I said, I will make more videos on other modules where I explain aggressive and conservative trading and day trading and scalping and swing trading and everything. For right now, this 4-hourly chart entry would be a swing trade entry, and you have to put your stop somewhere. The price retraces to the 36 EMA. Conservative traders want to see the price retracing back to the 36 EMA. I will repeat myself many times for a reason. Okay, now that happened, and then we have a clear 2 to 3 line break. Remember, this is your 2 to 3 line from point 2 to point 3. The candle closes nicely above, and now you have to put your stop under point 3. Point 3 is the lowest point of the retracement for if you look for long trades. This here is the lowest point, and it hit the 36 EMA. You have to put your stop under the lowest point here, under point 3, and you don't put it exactly like 1 pip under that low, but on the 4-hourly chart between at least 10 and 20 pips depending on the volatility. Okay, but generally between 10 and 20 pips. I would say 15. That's in between those levels. Now on lower time frames, if you trade in a 5-minute chart and that whole move is only like, I don't know, 10 pips, then you would put your stop about 5 to 10 pips under the 36 EMA, but on higher time frames at least 15 to 20 pips. Take a look at the ebooks. I explain everything there also. Now that means your stop has to go somewhere here. You have to place it somewhere here. That's about like, what is it, 20 pips. Okay, an entry there. Now you have a stop of 90 pips. This is your entry, this is point 3, and that would be about 90 pips. And for swing trade on the 4-hourly chart, 90 pips is not much, remember. And you have to check out the last video 10, when we talk about risk and money management. This 90 pips, the whole position would not be more than 1 or 2% of your whole account. So 90 pips or 10 pips or 15 pips, as long as it is only 1 or 2% of your account, no harm done. But that's video 10. Right now, your entry here, your stop here. You would have an entry up here and a stop of about 90 pips. When you place your trade, you would split this position into 3 parts. So let's say you have done your top-down approach and you have calculated your risk, and you know that you have to trade 3 mini lots in order to risk not more than 1% or 2% of your account. Then instead of placing 3 mini lots immediately, you split them into 3 parts. So you open 3 different positions, 3 times 1 mini lot. Okay, now you have 3 times 1 mini lot. All 3 positions need to have the same stop, but they have different targets. With a stop of 90 pips, target 1 would be about 90 pips, so 1 to 1, more or less. Okay, 90 pips. Target 2 would be 180 pips, twice the stop. So entries here, target 1 hit, target 2 hit. And now you have the last lot open. And as I said, depending on your top-down approach and the targets you have, you leave the last lot open, and if the price retraces at some point back to the 36 and bounces and creates a higher point on the chart, what you do, you take your stop with the remaining position open and you trail it under the low of the next 1 to 3. Make sure that the price creates a higher low there. Would be also great if you could create a support line, if you could draw a triple support line. Depending on the angle, you would also change or add a new line. Okay, so after your 1 to 3, you trail your stop and leave the last lot open. Now, trailing stops. For trailing stops, I will create a different video, but you get the point. It depends on how the chart looks and how the market moves. And as I said, I will create new videos for trailing stops. But generally, that's how you do that. Now imagine the price moves higher, retraces again, comes back to the 36 and close to your line, and it moves higher. And the price creates a new high again. What you do, you again take your stop from down here and trail it again instead of taking out the last lot manually. That's the way to maximize profits, if it makes sense, if you've done your top-down approach correctly. Now let me do it manually. Right now the price is moving up, so you just imagine right now the price would be right down here and you are placing a trade. So how do you do that? Right click in the middle of the chart, click on trading, new order, make sure you have the market execution on here, and then instead of 0.30, that would be 3 mini lots, you enter on volume, of course, 0.10, and make sure that that is a mini lot. Okay, some brokers have a different way to calculate it with the zero numbers, but usually 0.10 is 1 mini lot. You want to buy it, yeah, at that point here. Forget that the price is up here, we just assume it's down here. So what you do, buy by market, you do it again 3 times, click on trading, new order, 0.10, check the volume to make sure, buy, and then you do it again, trading, new order, 0.10, buy. I like to do these things manually to make sure everything is correct. Now click on terminal. You can also do that before, and where it says trade, you will see the 3 positions right now. In order to put the stop in, you have to click on each position separately. So first, that's your first lot you open, click on stop loss, where it says 850, that means 85 pips, we change it to 90, so 90 and another 0. Usually that's how it works on most brokers, MT4 brokers. Copy as, you click on copy as, click on the red button, then you see the price here with your 90 pip stop. Target would be for the first position, what did we say, 1 to 1 correctly, so 90 pips. Copy as, it will show down here, and then you click on modify, and you will see the red lines. Usually by default they are there. That would be your target, and that is your stop. Now we assume that we did it down here, yeah, where we had actually a signal. Here we don't have any signals, but you get the point. You do the same thing with the second lot. stop loss, that has to stay. We don't change the stop loss. Okay, copy as, you will see down here. With the target it's different now. What did we say about the second target? Twice the stop, right? So 180, another 0, copy as, there's the price, modify. The stop is there, target 2 also. What about the third one? You click again on SL where it says SL stop loss or take profit. On this position, double click, look at that, stop, again the same, we don't change the stop, it's okay, and you just click on delete, yeah, and make sure that this here is 0, nothing is in here, and then you just modify it, and you will see this, we have the stop at the same level but no target, because we want to leave it open. Right now, let's say the price went up and hit target 1 and target 2. For this purpose, I will close these positions. So in order to close an open position, you just double click on the position where it says order. That's how I do it. And then this yellow big button here is the close button. You close the whole position like that. That's it. You do the same with the second. Close. Now you have one lot open and you want to trail your stop. We assume the price went much higher and you made the first and second lot. So in order to trail your stop from down here to up here, right now it's up here, of course you can see it. Let's say you want to trail your stop higher. I cannot trail it too high because it would hit the target there. But how do you do that? Very, very simple. You just click on stop loss, and down here you just change the price wherever you want to put the stop. Let's say we put it at 101.32. So what you do, yeah, you just with a left mouse click you can make these numbers blue here, change it to 32 and modify. You will see the stop moved a little bit higher. You can also do it differently. You can just use these small arrows here to click and change the stop from here. Yeah, that was it. Very, very simple. Of course, you can do the same with the target. If you need to change the target for any reason, you do the same with the targets. You can just, let's say, whatever. If you want to change it, you can choose it here again, change the numbers, and then click on modify. Okay, it will be the same. Now, I will close all the positions. There we go. Now, if you click on account history, you can see all the trades here, and also the profits or the losses, the positions, everything. You can scroll up and down and see everything there. Very, very simple. You can also get rid of that just by clicking that X here, and then you have a bigger chart again. Yeah, that's how you do that. So video 8 and video 9, how to place your trades and split your positions into multiple parts, and how and where to place stop loss orders correctly. So I see you in video 10 on how to protect your trading account and calculate the risk. Have fun. See you later.